The biggest assault on this nation's economy has been the fractionalized reserve banking. And it has to do with this thought that the government allowed them, upon receiving a deposit, that they could turn around and wow, where's the thinking coming from this legislation that it could allow that bank to loan out up to 10 times that deposit? So you deposit $100, they turn around, they record it, and then voila, we got $1,000 we can lend. Therein lies the boogerboo of inflation, which is actually devaluation of said dollar. Now, this is not even talking about the middleman's interest game, compound mortgage. I mean, boy, what whiz-bang thought this one up. Gee, I'll loan you $100,000 for a house, and over 30 years, you get to pay me back $300. Wow. You think they know a little bit about devaluation or inflation, maybe? Yeah. Well, who creates the money? That's first off. Most people assume that money is created by governments or perhaps central banks. In reality, as noted by the Bank of England, Britain's central bank, 97% of all money in circulation is created by private banks through that very mechanism I just told you about. But how do private banks create money? We've all been taught that banks first take in deposits, then they loan out those deposits to folks who want to borrow. Now, on the surface, you know what? That sounds reasonable. Because, how can you loan to somebody? Feature this. You're in your garage on a weekend, you're working on something, and a neighbor comes by, complains that his lawnmower blade just flew off and cut his dog's head off, but his wife says, I got to finish the yard. So he comes over to borrow your mower. Now, would you be able to loan that guy your lawnmower if it wasn't yours in the first place? Or did you go into somebody else's garage in the neighborhood, take out a lawnmower and loan it to the guy that was looking for it? You know the answer to that. That's one of those rhetorical questions. And as I said, we've been taught that the banks first take in the deposits and then they loan out those deposits that people want to borrow. But this is the myth. The Bank of England, the German central bank, have explained that loans are extended before deposits exist, and that loans create deposits. Mikey, without danger of blowing up the board here, let me play this. This was an official video released by the Bank of England. Ready?
Banks create additional broad money whenever they make a loan. Now, while this is nothing new, it is sometimes overlooked as the main way in which money is created, and it runs contrary to the view sometimes put forward that banks can only lend out deposits that they already have. In fact, loans create deposits, not the other way around.
Well, loans create deposits. Isn't that amazing? Let's take the break. We'll take a 3-minute break and we'll be right back. Remember us reporting that in Greece, banks were doing bail-ins, bailouts, and bail-ins? First, they took the commercial accounts away from people, business owners, and had commercial, well, your money's not there anymore, it's ours. And then they turn around and start doing it to private depositors. And they basically came out with the one-liner, well, it's not your money anyhow, with no explanation. We're going to explain exactly how they're able to do this and do it legally and not find their keister behind bars. Whenever a bank makes that loan, simultaneously creates a matching deposit in the borrower's bank account, thereby creating new money. The reality of how money is created today differs from the description found in some economics textbooks. Rather than banks receiving deposits when households save and then lending them out, banks lending creates deposits. One common misconception is that banks act simply as intermediaries, lending out the deposits that savers place with them. In this view, deposits are typically created by the saving decisions of the households, and banks then lend out those existing deposits to borrowers. For example, to companies looking to finance investment or an individual an individual wanting to purchase a house. Now, in reality, in the modern day economy, commercial banks are the creators of deposit money. Rather than banks lending out deposits that are placed with them, they act as lending creates deposits, the reverse of the sequence typically described in the textbooks. Commercial banks create money in the form of bank deposits by making new loans. When a bank makes a loan, for example, to someone taking out a mortgage to buy a house, it does not typically do so by giving them thousands of pounds worth of banknotes. Instead, it creates their bank account with bank deposit of the size of the mortgage. Now, this got some ambiguity here because it says that it credits their bank with the account of the size of the mortgage. Is that the term of the loan? That $100,000 house that turns into $300,000? At that moment, new money is created. For this reason, some economists have referred to bank depositors as fountain pen money, created at the stroke of a banker's pen when they approve loans. Now, this description of money creation contrasts with the notion that banks can only lend out pre-existing money outlined in the previous section that I just read you. Bank deposits are simply a record of how much the bank itself owes its customers. So they are a liability to the bank, not an asset that could be lent out. Back in the 60s, the Federal Reserve Bank out of Chicago published a booklet called Modern Money Mechanics. And this little booklet said in part, the banks do not really pay out loans from the money they receive as deposits. If they did this, no additional money would be created. Well, really? Whoa, what a sin. What they do when they make loans is to accept promissory notes in exchange for credits to the borrower's transaction accounts. Now, monetary experts and economics professors Randall Ray explained to the Washington blog that bank deposits are bank IOUs. As I said, Richard Werner, economics professor who obtained his Ph.D. in economics from Oxford, was the first Shimomura Fellow at the Research Institute for Capital Formation at the Development Bank of Japan. Visiting researcher at the Institute for Monetary and Economic Studies at the Bank of Japan, visiting scholar at the Institute for Monetary and Fiscal Studies at the Ministry of Finance, and chief economist of Jardine Fleming, was granted access to study a bank's books and confirmed that private banks create money when they simply create fictitious deposits into borrowers' accounts. And Werner explained it this way. He said, what banks do is to simply reclassify their accounts payable items arising from the act of lending as customer quote-unquote deposits. And the general public, when receiving payment in the form of a transfer of bank deposits, believes that a form of money had been paid into the bank. No balance is drawn down to make a payment to the borrower. The bank does not actually make any money available to the borrower. No transfer of funds from anywhere to the customer, or indeed the customer's account, takes place. There is no equal reduction in the balance of another account to defray the borrower. Instead, the bank simply reclassified its liabilities, changing the accounts payable, quote-unquote, obligation arising from the bank loan and that contract to another liability category called customer deposits. Wow. Now, while the borrower was given the impression that the bank had transferred money from its capital reserves or other accounts to the borrower's account, as indeed major theories of banking, the financial intermediation and fractional reserve theories erroneously claim, in reality, this is not the case. Neither the bank nor the customer deposited any money, nor were there any funds from anywhere outside the bank utilized to make the deposit in the borrower's account. Indeed, there was no depositing of any funds whatsoever. The bank's liability is simply renamed a bank deposit. They're IOU, folks. They just simply recategorize it, wave a magic wand, and make it a bank deposit. Now, banks create money when they grant a loan. They invent a fictitious customer's deposit, which the central bank and all the users of the monetary system consider to be quote-unquote money, indistinguishable from real deposits, not newly invented by the banks. Thus, banks do not just grant credit, they create credit, and simultaneously, they create money. Now, instead of discharging their liability to pay out the loans, the banks merely reclassify their liabilities originating from loan contracts from what should be an accounts payable item to customer deposit. Now, this Professor Warner explains the reason that banks, but nobody else, can create money out of thin air is that they are the only institution exempted from normal accounting rules. Specifically, every other company would be busted for fraudulent accounting if they conjured up new money out of thin air by reclassifying a liability. Think about that, folks. You got a business. You got accounts receivable and accounts payable. Just one day, gosh, I got more goes out and I got goes into. So I just switched the name of the accounts. Well, my liabilities now became my assets. Hooray for me, I'm out of debt. Wow. You think you go to jail for that? Yeah, I think you would. Now, as I said, and then they're conjuring this new money out of thin air by reclassifying a liability. But the banks have pushed through exemptions so that they don't have to follow normal accounting rules. Now, what enables banks to create credit and hence money in their exemption from the client money rules? Ever heard that term? Client money rules? Thanks to this exemption, they are allowed to keep customers' deposits on their own balance sheet. This means that depositors who deposit their money with a bank are no longer the legal owners of this money. I'll repeat that. This means that depositors who deposit their money with a bank are no longer the legal owners of that money. Instead, they are just one of the general creditors of the bank whom it owes money to. It also means that the bank is able to access the records of customer deposits held with it and invent a new customer deposit that had not actually been paid in, but instead is reclassified account payable liability of the bank arising from a loan contract. Now, what makes banks unique and explains the combination of lending and deposit taking under their one roof is the more fundamental fact that they do not have to segregate clients' accounts, and thus are able to engage in an exercise of relabeling and mixing different liabilities, specifically by reassigning their accounts payable liabilities incurred when entering into a loan agreement to another category of liability called customer deposit. Now, what distinguishes banks from non-banks is their ability to create credit and money through lending, which is accomplished by booking what actually are accounts payable liabilities as imaginary customer deposits. We created an imaginary person. And this, in turn, made possible by a particular regulation that renders banks unique, their exemption from the client money rules. Now, Warner gave a concrete example of British law for banking and non-banking institutions. Sound fraudulent? Well, Professor Warner thinks so as well. This is what he had to say.
That's how the money supply is created. So historically, if you go back into how this system came about, it was fraud. There's no doubt about that. Historically, and of course, as the bankers became more powerful, they started to help, write the laws. And so today, technically, many lawyers would argue it's not illegal what they're doing. Doesn't mean we shouldn't try to challenge it legally. That's another topic. There's actually some grounds in which one could challenge the system legally.
That was the end of it. Don't panic. Now, what does it all mean? The implications of money creation by private banks? Mainstream economists believe that private debt doesn't even exist as a force that acts on the economy. For example, take Uncle Helicopter Ben Bernanke and Paul Krugman. assume that huge levels of household debt don't hurt the economy because, well, more debt among households just means the savers have loaned them money. That is, that this is a net wash to the economy. Now, to make this assumption, they rely on a myth debunked, as we just did, that banks can only loan as much money as they have on deposit. In reality, 143 years of history shows that excessive private debt in of itself can cause depressions. I'm not talking about you mentally. I'm talking about the economy. Moreover, Professor Warner points out that attempts to shore up banking systems with capital requirements, such as with the Basel Accords, are doomed to failure since they don't recognize that banks create money at all. It just ain't happening. It's been going on for 143 years, but no, we don't see it, so therefore it ain't. You know, if you're not in that forest to hear the tree fall, does it really make a sound? Now, the Basel rules were doomed to failure since they consider banks as financial intermediaries, when in actual fact they are the creators of the money supply. Since banks invent money as fictitious deposits, it can readily be shown that capital adequacy-based bank regulation does not have to restrict bank activity. Banks can create money and then hence can arrange for money to be made available to purchase newly issued shares of that increase in their bank capital. In other words, banks could simply invent the money that is then used to increase their capital. This is what Barclays Bank did in 2008. In order to avoid the use of tax money to shore up the bank's capital, Barclays raised £5.8 billion in new equity from Gulf sovereign wealth investors by, it has transpired, lending the money that they didn't have. And as explained in Werner's, he says that Barclays implemented a standard loan operation, thus inventing the $5.8 billion pound deposit lent to the investor. This deposit was then used to purchase the newly issued Barclays shares. Thus, in this case, the bank liability originating from the bank loan to the Gulf investor transmuted from 1, accounts payable liability, to 2, a customer's deposit liability, to finally end up 3, as equity into their bank. They paid themselves £5.8 billion out of nothing. Oh, we got the shares to show for it. Oh, God. Another category of the liability side of the bank's balance sheet, effectively, Barclays invented its own capital. Now, this certainly was cheaper for the UK taxpayer than using tax money, as publicity-listed companies in general are not allowed to lend money to firms for the purpose of buying their stocks. It was not in conformity when the Companies Act of 2006, and it's a prohibition, by the way, of the assistance for acquisition of shares in public companies, but regulators were willing to overlook this. Now, Werner argued that using central bank or bank credit creation is in principle the most cost-effective way to clean up the banking system and ensure that bank credit growth recovers quickly. The Barclays case is, however, evidence that stricter capital requirements do not necessarily prevent banks from expanding credit and money creation, since their creation of deposits generates more purchasing power with the increased bank capital can also be funded. Now, moreover, Werner points out that banks create the boom-bust cycle by lending too much for speculative and non-productive purposes. Here's Professor Richard Werner again.
Now, briefly, what causes the recurring boom and bust cycles, and what is the role banks are playing? Banks create the money supply, and you can divide the money creation into two streams. You may not be aware, but not everything is in GDP. We talk about the economy and the need to have GDP growth and so on, and the media report the latest GDP growth figures, but GDP actually includes very specific things. Let's call it the real economy. What it does not include is financial transactions, asset transactions, property transactions. The housing market, the transactions, they are not included. The reason for that is actually fairly sensible, because GDP, the fundamental definition is value-added transactions. So that's the verdict by the statisticians on the financial sector, on the financial transaction. It doesn't add value. Why? Well, it's a zero-sum game. If you're gaining through a financial transaction, somebody must have lost the same amount. It is a zero-sum game. So the more people are playing financial markets, or asset markets in general, the more unproductive the economy gets, because in total, it's plus minus zero. It's divide and rule, just playing people off against each other. They're betting against each other all day. Anyway, so we've got these two types of transactions. And the money supply and the money creation, which takes place through bank credit, as we saw, bank credit creation, needs to be divided into these two streams. So credit for the real economy, for GDP, that's real circulation credit, and credit for transactions that do not contribute to GDP.
All right. Excuse me, Professor. We've got to take this break. By the way, an off-air listener said Social Security Administration makes people put Social Security bank money in their bank accounts through direct deposit. You don't even get to cash anything, because this gives you a bird's eye view of this complicating, and made so, complicated banking system. Macro, microeconomics, so on and so forth. It's such a big mystery that nobody can seem to figure it out. By failing to take into account the fact that banks create money, economies and economists and governments are sowing the seeds for future crashes. But the economics field is very resistant to change, and obviously the real facts of things. In any genuine science, the professor goes on, empirical data like this would have forced the orthodoxy to rethink its position. But in economics, the profession has sailed on, blithely unaware of how their model of banks as intermediaries between savers and investors is seriously wrong, and now blinds them to the remedy for the crisis as it previously blinded them to the possibility of a crisis even occurring. A wit once defined an economist as someone who, when shown that something works in practice, replies, but does it work in theory? And from a 2016 IMF paper, reads in part, around the 1960s, banks began to completely disappear from most macroeconomic models of how the economy works. This helps explain why, when faced with a Great Recession in 2008, macroeconomics was initially unprepared to contribute much to the analysis of the interaction of banks with the macroeconomy. Today, there are a sizable body of research on the topic, but the literature still has many difficulties. And virtually all recent mainstream neoclassical economic research is based on the highly misleading intermediation of loanable funds description of banking. It's a secret that I don't want people to figure out. I mean, it's that simple. Now, in the modern neoclassic intermediation of loanable funds theory, banks are seen as intermediating real savings. Lending in this narrative starts with banks collecting deposits of previously saved real resources, like perishable consumer goods, consumer durables, machines and equipment, and, hard asset stuff, real stuff. From savers, and ends with the lending of those same real resources to borrowers. But such institutions simply don't exist in the real world. There are no loanable funds of real resources that bankers can collect and then lend them out. Banks do, of course, collect checks or similar financial instruments, but because such instruments, to have any value, must be drawn on funds from elsewhere in the financial system. They cannot be deposits of new funds from outside the financial system. Now, these new funds are produced only with a new bank loan or when banks purchase additional finance or real estate assets through book entries made by keystrokes on the banker's keyboard at the time of the disbursement. This means that the funds do not exist before the loan and that they are in the form of electronic entries or historically paper ledger entries rather than real resources. All made up stuff. Now, this financing through money creation function of the bank has been repeatedly described in publications of the world's leading central banks. What has been much more challenging, however, is the incorporation of these insights into macroeconomic models. So, out of all this, what's the solution? Again, Mr. Richard Werner says this.
It doesn't mean that we shouldn't introduce simple credit guidance in the form of just forbidding the harmful bank credit. We could always do that, and then you don't need an active credit guidance. You just say, well, no, banks can't lend for consumption or asset transactions, full stop. That's enough, actually, on this topic of credit guidance.
Additionally, allowing small community banks to grow would cause the real economy to flourish, since small banks loan to small businesses, which, by the way, folks, the corporate world doesn't want to recognize this. Again, the tree falling in the forest doesn't make a sound. Since these small banks loan to small businesses, which creates most of the jobs, while big banks only loan to giant companies and speculators. Now, indeed, big banks are virtually out of the business of traditional lending, and small banks are the only ones funding Main Street. Now, there's a war raging in connection with banking. Remember that the giant banks tried to kill off community banking through the Trans-Pacific Partnership. One of the reasons why Donald Trump said, "No way, Jose." And as Professor Werner points out, the European Central Bank is currently in a war to destroy community banks. Again, Mr. Werner.
Currently, the ECB is engaged in a war to destroy the 1,500, 1,600 community banks in Germany and also Austria and other countries where there's also still a few left. Why is that? Why am I saying this? Well, number one, since 2008, the EU massively increased bank regulation and the burden of bank regulation. Almost every year there's a 600, 800-page new document coming out that all the banks have to implement, which is pretty incredible a task facing a small community bank with maybe 10 staff or 15 staff. They just don't have the resources. They have to hire full-time staff now in this new reporting requirement, handing in regular reports and this, that, and the other, because the EU makes no distinction between the big banks and the small banks. You go to the US, where you have all bank sizes and also a lot of small banks. The small banks get their own regulator, and the regulatory burden is very light because they're small. It's very reasonable and sensible. But the EU is using the same rules for the world's largest banks as it's using for a German community bank with 10 staff. Can you believe it? So they have to close. And this is what's currently happening. So in the next 5 years, there won't be 1,600. We're lucky if there'll be 600.
So you can see when they move to their cashless whatever, we're going to do away with all these nasty little transactions, deposits, and book entries and having to shift. And no, you'll just have an account that will be credited with so many credits. And that's how we're going to do banking. We're going to completely remove from the public purview and their eye that tactile thing of actually holding money, which isn't even money. It's paper. It's useless metals or next to useless metals that can collect in the bottom of your purse or in the bottom of your pocket or your coin jar at home. This is not money to them, and it hasn't been for many years. Well, many people are still walking around going, wow, I've got a little money in my pocket. That's a debt IOU. And I'll tell you one thing right now, if Trump does not, he already, as I said, partially, you heard what I had to say about the TPP here. Now, he put a stop to the TPP, and that was one of the reasons one of the reasons. But the U.S. banks have been moving to cashless now at an accelerated rate. As I reported before, bank managers and employees of banks they received bonuses on signing up new accounts. Hey, come on over and make your deposits here. Come over and be our customer. They're not even doing that anymore. They're trying to get you into an ATM that eventually will stop dispensing cash, and it'll just be a credit checker. That's all that it's going to be. It will check your credits to basically make sure what you're paying out in the form of credit, you got enough credits in your account to cover the new money or the new idea of money. Ask one of these millennials nowadays, do you know what money is? You want to blow them away? You still got that silver dollar that your grandmother or grandfather gave you, or your mom or your dad had in their jewelry box? Flip them out. Tell them, you know what? I got a dime here that's silver, and I've got a quarter that's silver. And look, they used to make these big round things called silver dollars that were actually made out of what? Silver. They will look at you in absolute awe with a stupid look on their face. Well, I just used my debit card. Yeah. Yeah. I bet you do. Now, on the issue here, and this is a couple of years ago, so this is worth reminding you folks out there. Now, we were talking about the bail-ins and bailouts, okay? They're going to have to start doing that here in the United States. So if you have cash in the U.S. bank, you can expect to have the federal government take it all the next time the U.S. banks find themselves in trouble, which I can see looming right on the horizon right now. It's got an ugly look on its face, and it's very dark. The days of the federal government stealing money from taxpayers or borrowing it from the Federal Reserve to save troubled banks, as they did in the 2008 crises, may be over. Congress is considering initiating the theft in Cyprus and letting troubled banks bail in depositor money in order to make themselves solvent. Jim Sinclair, chairman of the Chief Executive Office of the Tanzania Royalty Exploration Corporation, and whose family started Goldman Sachs, Salomon Brothers, Lehman Brothers, and others, has been warning of this for a while. Bail-ins are coming to North America without any doubt, and it will be remembered as the Great Leveling, or the Great Flushing, however you want to look at this. Not only can it happen here, but it will happen here. It stands on legal grounds by legal precedent both in the U.S., Canada, and the UK. Remember what I said about the professor? That money that goes into that bank is no longer yours. It belongs to the bank. They already had the legal precedent. Ta-da! We made it up. Financial expert Michael Snyder adds, when major banks fail, they are going to bail them out by grabbing the money that is in your bank account. This is going to absolutely shatter faith in the banking system, and it's actually going to make it far more likely that we will see major bank failures all over the rest of the Western world. Now, this news isn't exactly new, but the story is still developing. The monetary system is much closer to collapse, and the bail-in is imminent. In fact, U.S. banks presented the Federal Reserve with a bail-in plan to pay for large banks' restructuring in the event of future crisis. The Wall Street Journal reports the plan was presented to the U.S. Federal Reserve in an attempt to preempt tougher rules for the regulators. The private meeting was reportedly attended by officials from Wells Fargo, Bank of America, Citigroup, and several other banks. The bail-in mechanism would be designed to place a greater burden on creditors as opposed to the taxpayers, them actually being the victims of the theft themselves, in the event of the bank's collapse. In addition to fleecing of the depositors in Cyprus, the burden keeping a bank afloat was put on the bondholders already this year when the UK's Cooperative Bank unveiled a rescue package that forced the bank's bondholders to take a $1.5 billion pound hit to plug the $1.5 billion hole in the bank's balance sheet. Now, the proposal presented to Federal Reserve officials would involve the largest financial services holding companies would be willing to hold a certain amount of debt and equity, which would be used to prop up any failed bank subsidiary seized by regulators. But the regulators would likely stick to their own plans, which involves more aggressive measures, including capping bank size, breaking up institutions, or forcing banks to take on more long-term debt. In the end, however, it's just not creditors who will be on the hook, but depositors as well. Jim Sinclair pointed out that banks legally own depositors' funds as soon as the depositors hand those funds over to the banks. The money becomes the banks, and the depositors actually become unsecured creditors holding promise to pay. Previously, the banks were obligated to pay back this loan on demand with cash, and under the new Federal Deposit Insurance Company, Bank of England FDIC BOE plan revealed this year. However, these promises to pay become equity in the bank, which won't be able to be used as payments for bills, which is why most people have money in the bank in the first place. Just a place to negotiate checks, folks. That's that, and pay bills. That was basically it. So the point is that your money ain't yours while it is deposited with a bank. And bail-ins are coming to shatter any illusion that they are there for U.S. depositors. Now, notice that the banks are already setting up deposits for seizure. Despite the excuses of the likes of J.P. Morgan, the banks are indeed clamping down on outgoing international wire transfers, are now putting its limits for withdrawal that are closing the doors. Now, if you don't get your money out, possibly by the end of the year or sooner, I don't know, you may not be able to ever get it out. Now, once doors are closed, the federal government might do a bank holiday and the bail-in to make the banks solvent again. At best, you may get some bank equity that is both illiquid, I should say, and which will be ultimately worth a tiny fraction of the deposit it replaces. Now, there's something else, a little known thing that came into effect in July of 2014. It's FATCA. Yes, FATCA. It will be nearly impossible for an American to get a bank account outside the U.S. It already is pretty hard, but it's going to become even worse. Now is the time to get your assets in an offshore account. Well, if you care to do so, or do yourself a favor, just keep your cash underneath your mattress. Keep it on you. I don't care if you walk around with it stuffed down in your underwear. I don't care. But keep it out of the damn banks. By the way, a little follow-up. Another listener called into the network about direct deposit, so security checks. Says he ignored the direct deposit letters and doesn't sign them. He still gets his check in the mail. He says, remember, don't sign any request for the direct deposit. Now, what he didn't say is if you could reverse it. But he didn't do it in the first place, so I guess that's not the best source to tell me. Let's take a break. We'll be back. And Merkel was over here. Angela Merkel, under more pressure over refugee policy as it's revealed, migrants committed 142,500 crimes in Germany during the first 6 months of 2016. Migrants in Germany have committed 142,500 crimes in just 6 months. And this is coming from police figures. This was the equivalent of 780 crimes a day, an increase of nearly 40% over the previous year, according to data from Germany's Federal Criminal Police Office. It comes as German Chancellor Angela, I really am an East German Merkel communist, remains under pressure over her open-door policy on immigration. And amid concerns of how to integrate 900,000 newcomers who arrived last year. According to the Gail Stone Institute, International Policy Council, police in some parts of the country fear that they're being stretched to the limit among climbing crime figures. The report said during the first 6 months of 2016, migrants committed, as I said, 142,500 crimes, according to the Federal Criminal Police Office. You know, was this judge down in Hawaii? Was he smoking some of the crap he was growing on his property or what? They all seem to ignore this. And now this federal judge has jumped into the misogynist bag that Donald Trump is a hater. This guy needs to go smoke his own stuff and retire from the bench. Migrant crime statistics for all of 2016, when they become available, are likely to show a significant increase over the 2015 numbers. And I'll tell you who's done, if you want to get a good idea. Jeff Rentz has he's dedicated a good portion of his website to the Muslim crimes, and I'm not necessarily down with this Sharia anti-Muslim bull crap, because it's something that's being shoveled at us as a distraction. Yes, it's part of the balkanization process and all of that. But it's another contention, and I don't want to take part in the contention that splits and divides. I'm all for leaving these people in their respective countries to support their own culture and their own societies if they have a country still left underneath their feet. Seems that we're in the business of bombing them out of existence and their culture and even their local residences and businesses. So I don't want to, if you're hell bent on doing this, folks, I would suggest you go over to Rentz. He's probably got 50 stories posted up there of all the shenanigans of all the migrants that they're involved in France and Germany and Norway and all over Europe. It's what we're trying to prevent here without jumping into their set trap of racism. Or it's anti-religious or whatever. You know what? I don't give a damn. Just, okay, can you do us a favor? If we promise to stop bombing your country into the Stone Age, would you stop trying to come here and other places around the globe, please?
U.S. President Donald Trump met with German Chancellor Angela Merkel for the first time since he assumed office. He said he expected the United States to do fantastically well in trade with Germany.
We just concluded a productive meeting with the German and American companies to discuss workforce development and vocational training.
Merkel said she hoped the U.S. and the European Union could resume discussions on a trade agreement.
We held a conversation where we were trying to address also those areas where we disagree, but to try to bring people together, try to show what is our vantage point, what is the American vantage point, and then try to find a compromise which is good for both sides.
Ken Kamen of Mercadian Asset Management.
For Chancellor Merkel, it's very important that trade continues uninterrupted and certainly untariffed. The president is still rattling sabers about tariff wars, so it's logical that they're going to talk about those items, and the CEOs from the companies that are at the White House are going to highlight how jobs are created in the United States. I think it's too premature to really expect anything very substantive to come out of this because, in some respects, it's still a first date.
The meeting between the leader of Europe's largest economy and the U.S. president was billed as one that could help determine the future of the transatlantic alliance and shape their working relationship.
Coming back into the United States.
You know, I've said this before that, you know, I'm not against General Motors or Ford or Fiat Chrysler or anybody else, you know, developing markets overseas, but not to be used as an excuse to go set up manufacturing and then, well, send those much needed parts for, you know, assembly of said vehicles inside the United States. If General Motors wants to develop markets worldwide, let them go build their factories, market their products, and build a customer base underneath that. If they're going to countries that are so poor that they can't afford what they're building, I refer to the 1920s Henry Ford model. Pay your people enough money, the least they can buy your cheapest product. Gosh. Apparently, not everybody is down with let's kill Assad. Zakharova, her name is. This is a source from Russia Insider. Oh, it's the Ruskies. They fixed our election. I can't do anything from RT. The UN High Commissioner for Human Rights says Syria is now a giant Assad torture chamber. And we're looking to defund the UN in this country. Hallelujah. And don't pass the collection plate. Russia's foreign minister spokeswoman Maria Zakharova thinks otherwise. March 15th marked 6 years of illegal war against President Bashar Assad and the Syrian people, and the media and apparent multifarious officials at the United Nations are mourning for all the moderate rebels who have perished. These are the people that we've been funding, folks. These moderate rebels that they call them. These are the people that we have been funding to go destroy Assad's military and Assad himself if they can get to him. Here's how France marked the anniversary of an illegal Western-manufactured war against Syria. This is what they said. On March 15, 2011, protesters took to the streets in a day of rage, demonstrations against the Syrian regime. 6 years and more than 300,000 deaths later, Bashar al-Assad is still in power and the country is still in ruins. Well, it's because you turned it into a ruin. Now, some historical, interesting revisionism and lying by omission is going on here. But this is to be expected from our trusted Western media. Apparently, there's also an epidemic of pathological lying at the United Nations. Go figure. You know what they're there for. Oh, you don't? Go read up on them. I don't have time to go into it. The UN High Commissioner for Human Rights, Zaid Riyad al-Hussein, gave an address on March 14th in which he said Syria has become an Assad torture chamber and portrayed al-Nusra and other terrorist groups as victims of circumstance. Yes, ISIS is just a victim of circumstance. And Russia's foreign ministry spokeswoman Zakharova said she wasn't impressed. We have taken note of the statement by UN High Commissioner for Human Rights al-Hussein made on March 14th at high-level thematic discussion on Syria at the 34th session of the UN Human Rights Council. Having appropriated the role of international arbiter, the High Commissioner claims that the situation in Syria is the worst man-made disaster the world has ever seen since World War II, and that as a result of the armed conflict, the entire country has become a torture chamber. Wow, did he miss us using nuclear weapons in Hiroshima and Nagasaki? Did he miss what we did with under pretense here with Iraq and Saddam Hussein? What about Muammar Gaddafi in Libya? Did he miss those manufactured events? I guess if the tree falls in the forest and nobody's there to hear it, it didn't happen. We have firsthand experience of attempts to rewrite history to suit the political situation at the moment. This phenomenon is characteristic of many Western countries. The High Commissioner is in effect trying to do the same thing. Blame the Damascus authorities for fueling the war in Syria. According to him, vetoes at the UN Security Council have repeatedly pushed back hope for an end to this senseless carnage. Meanwhile, he turns a blind eye to the fact that right from the start, this conflict was fomented and fueled by outside forces. He does not use the term terrorism at all and tries to portray terrorists as victims of circumstance. Why can I hear the Three Stooges here in my head? I'm just a victim of circumstance, Judgy Wudgy. I'm sorry, it's Friday. It's Aaron Go Bra, and I haven't even had any beer. I don't even plan on drinking any beer today. Now, completely unacceptable, but also completely normal for Jordanian human rights officials who serve Washington. Now, Zakharova concludes with some rhetorical questions. That raises the question, does Mr. Hussein's behavior measure up to the authority and the high international status of the post that he holds? What goal is he pursuing by antagonizing states that have been set on a constructive cooperation with human rights mechanisms? Perhaps his superiors at the UN Secretariat should also pay attention to this. Moscow can't even convince the U.S. to condemn suicide bombings, so we doubt Mr. Hussein's behavior would raise any eyebrows at the UN. But one can always dream. You don't know why the UN is there, folks. Go read up on it. Why has every commissioner at the UN been a damn communist? There's your starting cue. There's your starting point. By the way, the Paul Ryan thing, boy, this is really being whipped up. Some clowns are saying that by Thursday, a new bill is going to be passed and signed by President Trump. And in actuality, folks, look at it this way. You want to simplify this whole damn thing in frame of reference for future thinking on this subject? It's an insurance bill that's being passed. That's all that it is. Keep that in mind. The healthcare reform legislation unveiled by the GOP leaders a couple of days ago would at best have untouched a confirmation system that allowed up to 500,000 illegals to access taxpayer-funded benefits over the years of Obama administration. According to the 2016 Senate report, the government supplied $750 million of Obamacare subsidies to individuals whose immigration status didn't quite match up to legal status. The GOP plan would leave in place that very same verification process, or worse, destroy the verification process altogether. Can we have a countdown? Can we have a countdown here to ousting the House Speaker? Can we do a death watch clock thing? By the way, speaking of that, something just popped into my head before I go back to the story. Do you know how the term for the opposing sides, pro-life, you're pro-life. Well, anybody that backs abortion, murdering of babies both in and outside of the womb, literally killing viable human beings that are actually crying before the doctor kills them, that kind of thing going on. If they refer to us as being pro-life, then why do we not use the negative to that and just say that, you're pro-death? How in the hell are you going to overcome something like that? That's like having bubonic plague and a pustule, getting ready to burst on your face of going, you need to put some Noxzema on that. It's a bad zit. Call it what it is. It's pro-death. This just occurred to me today. I'm just driving down the road and I'm hearing a story on the radio and I'm going, and pro-life out there is and more rhetoric, and there's been rhetoric surrounding this for 40 frickin' years in this country. And they were referring to these pro-life people that want to see the abortion, the Planned Parenthood shut down. And I'm thinking, you know what? For somebody that's on the other side of the fence that points an accusing finger at somebody that says, you're just pro-life, then the finger should be pointed back and saying, you're just pro-death. How the hell are you going to get around that argument? The specter of death with this scythe and, the hooded character with the little, skull peeking out. How the hell are you going to get around that? You're pro-death. I think it's perfect. Anyhow, getting back to Mr. Ryan and his great bill. According to the 2016 Senate report, the Obamacare model gave benefit of a doubt to illegal aliens when they applied for subsidies. But if the aliens was unsuccessful in filing the needed paperwork, the IRS was expected to acquire the funds. The lack of cooperation between Health and Human Services and the IRS, however, forestalled the money from being recovered. But according to many Hill contacts, GOP Republicans may not even be able to get the unsuccessful verification process, which would leave their total plan open to illegal aliens, Under the plan, subsidies for health insurance would not be given, but individuals could obtain tax credits for buying health care on the government exchanges, which automatically leaves 50% of the people in this country out because 50% of the people are not paying into the IRS. So in order to get these tax deductions, guess what? You got to sign up with the IRS. Here, rape me some more. The whole Ryan Care plan is a big, fat, I'll say it, turd. Story says it's a kick in the groin. Yeah. To all the voters who gave the GOP a billionth chance on this issue, they've done nothing but caved into Democrats and, well, they all have the power to make a difference, to do what they were voted in to do. So what do? With your vote of confidence? Remember the people you voted for, folks. We're going to stop Obamacare. We're going to kill that Obamacare. So what are they going to do to you? They're going to give you Obamacare Light, or just another insurance bill. Rather than looking at this the way a sane human being should be looking at this. To reinstitute fair market principles to health care as a whole. In other words, put it back on a competitive basis. And I don't know what you do about this, but when you have insurance companies that are taking your payment for that premium, and they skim 70% of that right off the top and call it theirs, that may not be illegal, but it certainly isn't ethical. And what if we had capital out there, people that wanted to build new insurance companies? Maybe they would reverse that. Maybe they would say, you know what? Us making 30% off of somebody's hard-earned money that we take in as a premium payment, that we'll pay out 70% rather than 30%. Do you think that health provider, that health insurance company provider, would have people banging on their doors? I would think so. Wouldn't a hospital, knowing that a company is solvent and they've got millions of people that are signed up, when they show up in the hospital with their little card going, hell, yeah, we'll take you. That means we're going to get paid by the insurance companies. That means we don't have to inflate our prices back. And that the end user, the banged up, mangled human being that just stumbled into our hospital here, will be able to treat and not kill him when we present the bill? What a marvelous idea. Man. Put it back on the footing of just competitive business model. That's what used to happen in this country when people did not have health insurance and didn't need it against catastrophic illness or just showing up at a hospital for a lousy broken arm. Come on, people. These asshats in Washington, I don't give a damn. The swamp will never be drained. Not entirely and not completely. Because they're as crooked as the day is long. And to expect a crook to do something honest, yeah, good luck with that one. By the way, my friend Jack in California, and thank you, Jack, he says he got the thank you card and requests an update on Vince Finelli. I will give you that right after the break. Thanks for that inquiry, Jack, and thanks for your donation. We'll be back.